Hello, good morning, Assalamu alaikum. Today let's talk about Islamic banking and conventional banking, or the difference between conventional banking and Islamic banking. So, just want to give you a small summary. I also work for 5 years in an Islamic finance company known as People's Leasing and Richard Petty's Finance Islamic Unit. So, I have also completed my postgraduate diploma in Islamic banking and finance, and the body is from the UK Association of Business Executives and Practitioners. So, it's a very interesting area, and it was a niche, and now people started realizing that it's one of the most important element in the society. So let's discuss a couple of points. So interest, let's say the following are some of the key differences between conventional banking and Islamic banking. So number one point, the first point is interest based versus profit and loss sharing. So conventional banking operates on an interest based system where interest is charged on loans and paid on deposits. In contrast, Islamic banking operates on a profit and loss basis where profits and losses are shared between the bank and the customer. So you should try to understand that the conventional banking, let's say for an example, if we deposit maybe let's say 1,000 rupees on a savings account, so you'll be guaranteed a fixed percentage of interest on a monthly basis or annual basis. So that's fixed on your capital. Your get a percentage is being shared, is being given by the bank, a fixed amount. So whereas the Islamic banking, how it operates is if you put the same money, it's based on a ratio basis. Uh, so let's say it can be 55 and 45 is the ratio. So basically ratio is it can vary, right? So it's not a fixed amount. And also, not only that, Islamic bankings, they invest in halal projects because it is tied up with the Sharia law. So we cannot do anything against the Sharia. So we have the framework set up. First is the Sharia law that we abide by, and under that, the rulings on the banking acts we have to follow strictly because it's also monitored, and we account the Islamic banking is been audited by certain bodies like AOFE, etc. So like I gave an example, is Islamic banking, they have the ratio basis, and conventional banking, they have the fixed interest on the capital invested. So number two, uh, riba or interest is prohibited in Islam. So Islamic banking strictly prohibits riba, interest, whereas conventional banking is based on concept of interest. Riba is considered haram, forbidden in Islamic finance, as it is seen as exploitative and unfair. So like I said earlier, interest is a haram in Islam. So we have to keep away from interest due to its nature of trying to take take a lot of basically it's trying to make another person in loss, because if the due date or something is, let's say I take a loan from a person, and I have to, if the person gives me a deadline or a date, and if I cannot repay the full amount in that particular day, and what he does is, okay, the each day I delay, he keeps on adding the interest keeps on accumulating like a compound interest. So that's one of the most unethical practices. So that's why it's haram in Islam, that the practice of interest is forbidden by our religion. Not only that, it's also even Judaism and Christianity also, it's actually not permissible to practice interest in the transactions. So that's number two. Number three, it's backed financing. Islamic banking requires that all transactions be asset backed, meaning that financing is provided based on the underlying assets of the transaction. In contrast, conventional banking may not require such banking. Yeah, will may not require such backing, and loans can be provided based on credit worthiness alone. So normally Islamic banks, we have an asset to back out, like each finance component has an asset to be backed up. Example, let's say if a customer wants to go for a loan. So normally the first question that the Islamic banking, the officers or the marketing officers, they ask is, what is the purpose of getting the loan? We don't normally give loans to the customer's name itself, so we don't do personal loans. There should be an asset involved in obtaining a loan, or it should be like financing, like project financing, or capital, to be working capital requirements. So those kind of essential things for a business to run and operate its daily tasks, we can obtain loans from the Islamic bank. So let's say the customer walks in an Islamic bank and says that, okay, I want to buy a car. So in that case, there's an asset involved, and yes, for obvious reasons, based on the credit worthiness of the client, whether he can repay, and seeing his background on the finance perspective, they will obtain the loan. So basically, the bank will buy the car on behalf of the client from the vendor. So it will be the ownership, like the certified, the registration, the vehicle registration will be, absolute owner will be the Islamic banks, and the customer will be using the asset. So it's like a form of rental based, I would say, like ijara product is kind of a in a rental based system. Like if we are staying in a house, rented house, since because of we are using the property for a month or for a year, we pay a rent for it. So the same policy applies for the Islamic bank ijara product. So that's an example. Number four, Islamic contracts. Islamic banking uses various contracts to facilitate transactions that comply with Sharia law, such as murabaha, musharaka, and ijara, among others. These contracts are designed to ensure that transactions are compliant with Islamic principles, while conventional banking uses standard loan agreements. So agreements is one of the most key factors for an Islamic bank. It has to be properly done uh, with the help of lawyers. So there are certain principles, like obviously interest is not part of the contract, and it has to be crystal clear, the agreement, like this is what we are going to charge from the customer, the profit and the cost, everything is it's disclosed. There's absolute transparency in Islamic banking. There is no room for there's no zero tolerance when it comes to this thing. We have to make sure that the customer knows what he or she is getting into. um, so everything is disclosed, the ups and downs, basically the customer is aware of from the start itself, when upon signing the contract. So there is no hidden charges and certain things which are not the client, it should be very crystal clear before signing the contract.